Good morning, guys. Welcome to this Tuesday, May 12th. And we're getting into CPI today. So CPI coming out this morning. Margins are up. The Small Business Optimism Index came out as well. That was 95. Yeah, okay, a little bit weaker than expected, but not bad. CPI coming up at 8:30. That should show some influence from the oil prices. That's the first, I think, you get full month, or second, maybe first and a half, 1.5 months of data or so. But it should be at least a full month of higher oil prices included in that number. So we'll see how that comes out. I think the market is kind of backing off into that number, thinking that it could be a bad print. They got that thing going on, and also we got the Iranian situation, which is now it's coming apart again. So that's going to be with us for a little bit longer. And if you didn't pay attention, they sent back a proposal which was kind of crappy, and so that ceasefire is now life support. And probably that's where the market one of the reasons market is kind of starting to take a little bit of a breather here. So maybe some fear for the inflation, maybe a little bit fear of the kinetic action kicking back on again in the Iranian situation, and the market backing off a little bit from their highs. Now, they haven't really backed off in a way where it's selling off. It's just kind of backing off a bit. So I would not be too worried about it just yet. But with this kind of a run up we had in the last few days, I would not be surprised if we get a little bit of a, we kind of do for a couple of days of weakness. So it's not by any means anything unheard of. So I would start off, excuse me, guys. I would start off range bound. I would stay, I would not, if anything, I would favor the long side, but I'm not going to trade it on the long side super aggressively from the get-go. I'm thinking I'm going to watch the CPI number come out, and if it's a bad reaction, I'm going to stay on the short side. I'm going to see a negative reaction to it. And if it stays volatile, but not necessarily start taking off to the downside, then I'm just going to stay range bound and watch these upper level here at the 74.30s fairly carefully and see if they can get up above that again. They didn't get up above that 74.30s and 74.40s. But I'm keying in on that 30. That's a low volume area right in front of us. You didn't get up above that again. I think we are back in a spot where we can potentially trade back up again. So today could be an interesting day. We could see a little bit of risk off kind of trading. We could see a range bound sloppy market, or we can see a good print on the CPI actually take the market higher again. So it's a lot of things can happen. I think one of the big blankets hanging over the market, obviously, is going to be that Iranian situation. Getting a deal there now seems very unlikely, or some kinetic action seems a lot more likely right now. And when that starts, you're going to see a negative reaction, but it may not be as violent as it was the first time around, but it's going to be some sort of a negative reaction to that. So let's kind of pay attention to that. Probably not going to happen until we get closer to the weekend or something like that. Usually those things kick on and when the market is closed. So, but I would just pay attention to the upper level 74.30s. If they trade up above that one, maybe get back on the long side. But yesterday could be very well the day which cut off the buying. So that's how we get started. Man, start talking and coughing, start coughing. This is amazing. So and on the way down, looking at these lower areas, the 73.45, 73.35, 73.25s. These are the three lower areas, and this lower area right here on the F1. So that comes out. You start retracing these single prints on the way down on the capital flow chart. We may have a move to the downside building. Maybe not the move out of the middle to the downside. We haven't quite gotten there yet, but we are definitely in a cut off the buying mode. And if that holds, the next thing is to look at the spot that's going to cut off the selling. And the spot there could very well be right down here around the 73.40s. And once that happens, then we're finding a spot to start building balance. It's just a normal market profile build-up. There's always news and stuff in a part of that construction, if you wish. Because you also have now some piece of news kicks off the market to the upside, and that we've been in that move out of the middle to the upside for quite a while, and now we are back up here 74.50, stalling, and we could very well be in that spot now, looking at the spot to cut off the selling and finding a lower edge in our distribution. So starting off range bound, favoring the long side still, but with a little bit of caution. Watching that CPI number come out. We also have a 10-year auction come out later on at 1. That could also potentially impact the market. And those auctions are pretty important to see how the government raises money. So, and looking to buy against the 7400s, 7390s, 7380s. 7360, 65s here for rotations up. Below the 65s, I think they're backing off a little bit too much to be part of early weakness. Still looking to buy against the 45s, 35s, and the 25s. But below that, if all these come out, bets are off, we are risk off mode, and we are heading lower at that point. It's going to be look pretty gnarly if we manage to get all the way down there, and it's gonna feel like a pretty good sell-off is going on. So. You will notice. So that's how we get started this morning. In the short side, looking for short setups against that 74.15, 74.30s for rotations down early on at least. And this is just because I'm primarily range bound. I'm favoring the long side, but I'm primarily range bound right now, given all this buying we got going so far, given that we have a CPI coming out, probably with a little bit harder print than you want to see. But if that comes out, if that CPI print comes out with a pretty good number, there's no reason market can't just keep going higher again. So, but in the initial two levels I'm paying attention to is 74.50 and 74.30s. Above that, we have the 74.40s and the 55s for rotations down as well. Not going to be super aggressive on those for short setups. If we can take out these first levels, we may have a pretty good move going on the upside as well. So it could be an interesting day. Hard to say which direction it's going to go, but no matter which one it does, we have ways of dealing with it. So we have some range on the downside here, but we don't have to worry about the short side in a huge way. But if they start taking out a couple of these levels, that's 7400, 7390s, we may be part of an early weakness sell-off, and it could be a short worth trying to get on there on the way down here. So those are different options. But as they head lower, avoid selling into support and look for buying opportunities against those support areas. So if they're going to run it down to the 90s, the 80s, the 60s, 65s, it's hard to say which one they're going to go to if they start pushing lower. Just look for buying setups against those. No reason to be super aggressive against them either. So just wait for a retest failure or something to that effect. If you get big bars and a V bottom, it's no shame just leaving it instead of trying to risk it on a bigger trade or a more risky trade. So that's how we get started on the ES. Nasdaq backing off a lot more. They are already up here. They already backed off quite a bit. So they cut off their. You can see they cut off the buying at the 470, 480s. They're already down at the 100, so they're down 300 points already. So a pretty good move to the downside. Watch that lower area down here at the 29,070s. If that comes out, I would just stay on the short side. Nasdaq has pulled back pretty good in the overnight. So starting the same way, favoring the long side, looking to buy weakness. I would favor that approach at least for now. But given the overnight, I would look for more early weakness and not be super aggressive getting long against it. So looking to buy against that 29,130s, 29,070s. And if you start retracing, I would probably stay on the short side if I can. So not quite there yet, but I'm going to be aggressive on the short side. But if they start taking out the 29,070s, definitely stay on the short side to see how far they want to retrace it. And Nasdaq could certainly run it down here to the 29,000, even 29 or 28, 960s. It goes a ways to go. They 910 is when they start finding some support again. Then they get into this little area. So we have a lot of single prints to retrace on the Nasdaq, and we are kind of in that mode right now. So the only thing we have in between us and all the way down here to the 28 800s is really the 970 here, that little ledge we got there. So we don't have a lot to lean against. So I would just look to buy weakness early on here. I'll favor it alongside, depending on how that CPI print comes out. Same reasoning as on the ES, just the levels on the Nasdaq would be they start taking out that 70s, stay on the short side. Looking to buy against the 29,000, 29,050, sorry, 28,950s. Below those two, just stay on the short side. They keep going. But I mean, it's the key thing is really not to try to sell into support, right? If you're in that F4 screen looking at the market selling off, it's easy to miss that. And once you get it looks like it's setting up great and it's heading lower with a vengeance, and you sell into it and find yourself selling right into a support area. That's usually a mistake you don't like to make. So anyway, so that's how we get started. Pay attention to that 970, sorry, 29,070 on the Nasdaq. Below that one, just stay on the short side of this, and let's see how this whole thing develops. On the way up, I didn't talk too much about it, but short setups on the Nasdaq here against the 220s, the 260s for rotations down. I would look at those two initially. If they start trading above it, we may have a nice retracement trade up to the 350s or the 340s. But in the bigger picture, maybe that's small too fast, huh? There you go. So if they take out this area, the 29,400, at that point I would be more aggressive on the long side. But I would look for short setup initially against these two levels here. If they start taking out that London high, start retracing, I would be moderately optimistic on the long side, maybe try a long trade here. Still looking for shorts against that 350s and that 400s for rotations down. That's a little bit less aggressive if you get that back that far up. And that could be, you never know how this is going to develop. Sometimes you get the reaction to the downside and like a shakeout run to the upside. But it's remember, we are in the stage 2 kind of development right now. It looks very much like they cut off the buying on the Nasdaq as well, and I would be a little bit less aggressive on the long side today. Just watching the news, watching the headlines, and see if there's more of a risk-off day building or not. So still leaning towards the long side, looking to or favor the long side. In other words, looking to buy against weakness. But given the pullback in the overnight and the potential headlines coming out, just be mindful about the short side and potentially risk off. And we know when to change our bias on the ES and Nasdaq, and when things really start to when the wheels really start coming off, that will be below that 73.25 on the ES and the 950s or 28 950s on the Nasdaq. All right, so that's the ES and the Nasdaq to get started on the bond market. We have a 10-year auction today, so if you're going to trade the bond market, be wary. Dealer manipulation will most likely show up, like you see right in the morning. That's dealer manipulation. It's like a slow grind down like this. When it's not moving back and forth in a volatile way, it's moving directionally to a spot and then stop. That's usually what dealer manipulation look like. You just have to be a little bit less aggressive at the edges. So if you think if they're moving, you want to be part of that direction. So we'll see. Right now, the overnight has been moving lower, lower, and looking at the 112.18s, 16 to 18 for a buying opportunity. It could be down there, but it's as I said, if they're going to start moving that lower, you have to try to figure out what direction they're going in and try to get on that direction, because that's how this whole thing works. And if you try to step in front of it, you'll just get run over until it's such time that you manage to find the edge. But if you lose three times in between, that's going to suck too. So just dealing like the days like this, 10 and 30-year auction days, just trade the bonds with a bit of auction, a bit of auction, a bit of caution, a bit of caution. All right. So, but we are starting off with the bias to the downside, given the overnight. Let's see where they're going to go from here. But just be mindful. Today you're going to see some deal manipulation on the bonds. Now on the cryptos, not much going on those. The only one is moving is going to be oil, moving higher together with the rest of it. Silver, gold just flopping around. So gold, as you can see, is moving higher. Not in a very nice fashion, but definitely moving higher. And we just have to see how this whole thing, how far they're going to go. But this is all, the oil price is going higher. It's all about the Iranian conflict and the likelihood of kinetic action kicking back on again in a big way. So it is unfortunate, but that's how it is. They're dealing with religious fanatics, then nothing goes, or everything goes. Depending how you want to look at it. So that's how we get started. So news this morning is going to be that CPI number coming out in a few minutes. We have a 10-year auction at 1. In the meantime, as I said, I'm going to start this range band. I would favor it alongside still, but if they start pulling back here, they start retracing, trying a short trade below that 73.90s could be an opportunity on the ES. And on the NASDAQ, I would hold for the 29,070s before I try a short trade on the downside. And still, as they head lower into support, looking for buying opportunities still, and then until they take out the lower edges of our analysis. At that point, if they go lower than that, then bets are off, and we're in a bigger risk off kind of a day. All right, guys. So that's it. I hope it wasn't that too confusing. When you had a little bit nuances, a few variations, it tends to be sometimes difficult to kind of figure out which direction you're in or what the market is trying to do. But if in doubt, just sit on the sidelines, figure it out, and then make your call. The best you can do. All right, guys, we'll leave it there. So good trading, and I will see you guys back at 11:30 for the next update. Later.